if you have a position that's open and you don't have any stop loss, you could possibly see drops in the Forex market while you're actually sleeping. So I've also seen instances of people who made mistakes that way. Anytime you go for something that will give you a level of return, there will always be volatility and there will always be certain amount of risk attached to it when you invest. So in this video, let's talk about what's a better investment. Is the stock market actually better than other asset classes, or does other asset classes have merit? Let's talk about the stock market versus Forex, the stock market versus commodities, or the stock market versus buying indices as a whole. Before we begin, please do note that I've been in the stock market for over 16 years now, and I've seen crashes from the 2008 Lehman Brothers global financial crisis, from the crashes that we've seen because of COVID, or some other crashes or drops primarily brought about by the increasing of interest rates. I've seen how it has been, and it has its own share of volatility and risks as well. What I do like about investing directly in the stock market is it makes you an owner of companies. And as it makes you an owner of companies, some of those companies give you dividends. And dividends is a good way also for you to be able to store value, but not just that, get repetitive cash flow. Now, that being said, let's compare the stock market with the Forex market. What's interesting about the Forex market and where I think it has merit is that, number one, it's 24 by 5. If you're invested in a certain stock market, you're limited by the trading hours when it's actually open. I remember when I was starting out that since I was investing first in the Philippine stock market, I had to be pretty much online and watch the markets while I was at work or during office hours, and it also somehow took bits and pieces of my time as well. Whereas for Forex, when you get home, that's when you can start trading, or you can do it also on the fly because it's 24 hours. And what's nice about Forex is this: in terms of analysis, it's, I think, relatively simpler because it's easier because you're following interest rates, you're following foreign policies, you're following the GDP of a certain country, and it's easier to look at those data because you're looking at macro level data. And if you're just comparing major currencies, you don't have to look at a lot versus, say, the stock market. In the Philippines, there's over 200 plus. When you go to the US markets, it's thousands. So there's a lot to choose from, and it adds to the complication to it. Forex, on the other hand, is relatively simpler. The analysis, it doesn't require you to go through different financial ratios. It doesn't require you also to look at balance sheets and compare them to different industries if the company is also worth buying. You don't have to do that if you're investing in the Forex market. So the merits that I find in the Forex market is its simplicity, because there's just a few major currency pairs that you could choose from, and the data that you have are given by central banks. So it's relatively simpler, and the ease of trading and investing because it's 24 hours a day. So just to balance out also and to give some cons is, because it's 24 hours a day, if you have a position that's open and you don't have any stop loss, you could possibly see drops in the Forex market while you're actually sleeping. So I've also seen instances of people who made mistakes that way. So please do note this: everything I'm discussing, from stocks even to Forex and all of the other things that we're going to discuss, it has its level of volatility, it has its level of risk. That's what's part of it. Anytime you go for something that will give you a level of return, there will always be volatility and there will always be certain amount of risk attached to it when you invest. That's why we're making videos like this, because videos like this will somehow also give you the ability to be able to learn and to be able to find what investment fits you. Next is, let's compare stocks versus indices. What's nice about indices is that if you compare like S&P 500 or the Dow Jones or even the Nasdaq index, it gives you already a snapshot of what's happening to a particular country or to a particular economy. And what's nice about that, and I've said this in different videos, when you compare buying individual stocks versus buying indices, there's a risk that when you buy individual stocks that it could go bankrupt, that it could go to zero. But for indices, since they're recalibrated, they're rebalanced on a regular basis, there would be no point in time that you would own a stock inside that index that would go bankrupt, because before they even go bankrupt, they would have been taken out of the index as well. And what's nice about that, if you're the type of person that can't go micro, meaning you can't go and learn and look at individual stocks, but you want exposure, say, to the US, and you want exposure to tech stocks. So for example, you don't want to think about, what do I buy? Do I buy Apple? Do I buy Microsoft? Do I buy Google? Do I buy Amazon? Do I buy Meta? or do I go Nike, Starbucks, etc.? You could just buy the index if you just want exposure to the US. And here's what's interesting, at least from a long-term perspective also, indices tend to outperform individual stock picking. So, of course, there will be people who will do better in individual stock picking, but on the average basis, people who have bought indices have performed better. And from a trading standpoint, I think there's a larger amount of volume as well when you're looking at buying indices as well. You have to realize this, when you look at indices, they're somehow just composed of individual companies. But since you're looking at the snapshot, you're looking at the index, you don't have to go through the nitty-gritty of looking at those companies as well. So why am I saying this? If you're the type of person that just wants exposure to a particular economy or to a particular sector, indices are the way to go, because you don't have to deal with the nitty-gritty of looking at certain financial aspects of that particular company. And somehow, because it's a broader approach, you have to realize also there's a lot of funds that are buying those large indices as well. And it gives you a sense of liquidity. It gives you a sense also that the larger the market cap is, the more stable it becomes as well. So next, let's compare the stock market with commodities. So please do know this, commodities could either be gold, it could either be silver, it could either be some goods that people use on a regular basis like coffee. Those are all considered commodities. It should be based on what your particular knowledge is over a certain sector, over that certain commodity as well. So I, for one, have been a very, very big fan of gold. And one of the reasons why I like gold is that it's very scarce. What I like about gold also is that, as you all know, the Federal Reserve kept printing and printing and printing and printing, diluting the value of the dollar. However, for gold, gold is very, very scarce. And as you can see also, one of the reasons why gold has moved up over the past few years is primarily because of its scarcity, or when there's uncertainty in the world, gold somehow becomes a safe haven where people come in and start to buy. The main difference though, when you start buying commodities, it's purely driven by supply and demand, meaning the value, say, of silver or iron or coffee or copper or bronze is pretty much driven by its economic demand. So meaning more companies that would need nickel or silver or iron for whatever they're actually producing, the demand goes higher. And if the demand goes higher, the prices would move up as well. So it's pretty much supply and demand, but it's still pretty much also dependent on the underlying use of that particular commodity. And if you look at it also from a commodity standpoint, it becomes simpler in a way that as long as you know that there's a large demand for it over the long term, there will be a larger amount of buying pressure for it. Unlike for the stock market, you are looking at companies, there's a lot of people involved. You're judging the CEO, you're judging whoever's in leadership, you're judging the market, you're looking at also how big their expenses are, you're looking at their balance sheets, you're looking at their debt. If you want purely just the commodity and its pure demand for it from the market, and its value over the long term because there's a demand for it, then that's where entering the commodity market would work well for you. But if you're the type of person that really likes looking at companies, analyzing it, and do remember this, when you go the stock market route and you're analyzing companies, you get dividends. For commodities and even for Forex, there's no dividend attached to it. So you really have to know that it's a capital appreciation game every time you're into commodities, every time you're into Forex, because sitting on it, the way you make money is if it goes higher, you need to take profits at a certain point. Versus individual stocks, the ones that give dividends, you can sit on them and probably sell later on, but while you're waiting, you get rewarded via cash flow from the dividends that they actually give you. Please do remember this, there's no such thing as a perfect investment. However, there's such a thing as an investment that fits you and works for you. I've seen a lot of people who have been successful in the stock market. I've seen also people who have been successful in indices, in Forex, and commodities. It's all about studying, taking the time to learn, and finding out what works for you the most. So if you want to try stocks, you want to try Forex, you want to try commodities, you want to try indices, you could check out Octa FX. So what's interesting about Octa FX is that they're expanding in the Philippines. And for those who are asking, the broker is convenient to use. They don't have any lagging issues. They have very, very fast deposits, and they are available on all platforms. And for those who want to go deeper and analyze more, they have qualitative analytical materials available for you to be able to make smart decisions when it comes to your investments as well. What's interesting is that they have 24/7 customer support for any issues that may arise, which is, I think, important, especially if you need a helping hand or if there are some problems that may arise, a very, very good and reliable customer service is something that's important, which is something that they have. Being in the market for over 16 years now, I've seen how technology has evolved. And that's what's nice about it, because it has made it convenient for people to be able to have access to investing and trading. I actually remember when in the earlier days of me investing in the stock market, when I would sell a stock, it would take 3 days before I could use the cash again to be able to buy. Right now, the execution has been faster, similar to what we have with Octa FX. Because if you look at Octa FX, they have a well-rounded combination of offers. They have no swaps, no commissions, somehow will lessen your costs and help you to become more profitable. Spreads are moderate to low, and leverage gives you an advantage to trading. OctaFX is doing something that's very interesting in bringing adoption of investing and trading in a way that's easy for people, and in a way that people can do also while they're employed or while they're running their businesses. For those of you who want to try OctaFX out, check out the links in the description below for you to be able to sign up and actually try it. And you can use my promo code, which is down below or flashing right here, GERMO23, for 100% deposit bonus on your first deposit. I hope that this video is insightful to all of you, that this gave you context that you can try the stock market, you can try indices, you can try commodities, you can try Forex, that it's not about playing a perfect game. It's not about also trying to be an expert in all of this, but actually trying and seeing what fits you the most. I hope you got a lot from this. You could try OctaFX for you to be able to try those different asset classes. That's it for now. Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.